Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, November 20th. Okay, before I forget, today is November OPEX, option expiration today. So make sure you review all your positions and ensure that you don't have any ones that you've neglected or overlooked that expire today, so you don't get inadvertently assigned a bunch of shares that you didn't want or whatever. Also, yeah, well, that was it. Next week we've got the Thanksgiving holiday, so markets are closed on Thursday. There's a half session on Friday that closes at 1 o'clock. So I doubt there'll be a lot going on that day. You'll probably see, markets just kind of oscillating on that particular day. So a shortened week. And then what else? Oh, last night after hours, it was made public that Treasurer Steve Mnuchin has asked the Fed to return all the unused monies for the COVID relief programs that haven't been used, return them back to the Treasury. And that's come across as an odd request. Everybody thought that these programs that are due to expire on either 12/24 or 12/31, depending on which program it is, everybody thought that they would just more or less automatically roll over and into the new administration. But for some reason, Mnuchin wants that money back and has requested from the Fed to return it. So futures didn't like that too much last night, and they sold off, not dramatically, but enough to notice. So what I want you to do is make sure you mark that pre-market low or the overnight low on your platforms, because although prices have rallied since then and we're back up to mostly unchanged from yesterday, that may be a level that traders want to revisit heading into the weekend. With the COVID news, there may be more news coming out today about that request from Treasury to the Fed. We have a couple of Fed speakers today. I think Raphael Bostic is one. I forget who the other one is. Maybe it's Neil Kashkari. I'm not sure. But a couple guys are talking today, so they may have market moving comments about that request. So stay on your toes. Stay on your toes is all I'm trying to say, and mark that overnight low on your platform in case we make a run for it today during the regular session. Okay, let's jump in on SPY. We've been locked in this trading range here for the last week or so. Market trying to decide if it wants to. First of all, the bulls and the bears are battling out, and secondly, the growth guys versus the value cyclical guys are battling out as well, and neither one is really making much progress at this point. So we've been treading water, real choppy markets. Of course, like I said yesterday in my afternoon note to you guys, there's always stocks that you can find during the day that are moving that you may want to, if you're actively trading, that you may want to participate in. But it's very difficult for me to get you that information, on the fly. And just as I sit here on the desk, I have not been trying to, grab all these, different names during the day. I just have not been motivated to try and do that lately. I keep my eye on FANGs and I keep my eye on the indexes, and then going through the charts lately in some different segments of the market that I have not reviewed in a while. looking for potential setups that we can jump on once the market chooses a direction, but because market direction is going to dictate 75% of what a stock is going to do. So if the broad market is going nowhere, it's difficult for, sectors to just, rip or go down. They're going to be choppy as well. So it always helps to have the market go in the direction that you're trying to do, and then find the sectors that are working the best within that move. So SPY 2 hour, nothing's changed. 357 is your pivot point. Above, can look for higher prices up to 362, and below you can see that support was found at 354. So you're really looking at, plus or minus $3 on either side of 357. So we'll see if they want to ramp it into what basically is a COVID weekend, or if people get scared feet in the afternoon and want to bring it back here a little lower heading into the close. SPY 30-minute. Here you can see that 357 level really clear. You can see that yesterday price came down with nearly a perfect tag of this gap where support was found, and did a lot of oscillating until the afternoon, where prices lifted into the close. Qs. We had a false breakdown below 290 yesterday, and then it recovered and broke back above. So from a trading perspective, and we'll see this on the 30-minute chart, you had a nice opportunity yesterday if you were motivated and interested. When price broke below 290 and then recovered it, that was your buy. Recapturing a well-defined level from below is bullish. You could have got long at 290, and that was good for $253 with no rough candles really to shake you out of the position. So that worked out really well. So for today, key off at 293 and 290. If SPY can recapture 293, I think you can get long and look for a push higher. If it gets rejected here at 293, you have an objective short with a stop just above, with a look back down to 290, with a potential break there targeting 297. So you've got this well-defined trading range here between 290 and 293. You can either decide to play within the range or wait for a decisive move, either out and up or down out of that range. And then here was your false breakdown yesterday and the recapture and subsequent move higher towards the end of the day. That would have been a nice little trade. $3, no scary candles. So that was, that was a good one. That was a good one. IWM. Notice the perfect tags of the gap where it found support and then bounced. You had two chances to buy there. You can see came down on the initial candle, bounced up a little, then came back down again. So that was an area to buy if you were motivated to do that. So, in this particular instance, it was good for $2. Once it came back for the second time, if you were, even if you had gotten long back here, I don't think you would have been stopped out here, stopped at the same place, and then bounced. So for today, 177 is your pivot. A break above, you can get long and look for a move back to this prior high at around 179.50. And if it is rejected, you have an opportunity to be short against 177 with the hope that you come back down and test this gap again at 175.40 and possibly break it for a move down to 173.50. Notice, however, that you've got the PPO bottoming out and looking to curl higher. So if you got a move above 77 or 177 and then PPO broke above the zero line with RSI moving above 50, that would be your, more or less your triple signal to be on the long side on that break above, with confirming signals of RSI and PPO. Facebook, not a lot going on. There was this initial breakdown of 273.50, and now we've got a back test. So the posture is bearish until price can recapture 273.50. So that's your pivot today. I think as long as price is below 273.50, the door is open to 266 right down here. And if it can recapture that line, then the door is open for a move to 279, 280. But real choppy action in here, as you can see, not really getting any impetus to go one way or another. Apple, pretty much the same thing. You had a breakdown here. I would have thought that it would have, gotten some follow through, but that didn't happen. So it came up, oscillated right at 118, and then made a little advance towards the end of the day. I still think 118 is your pivot here for lower. If you're not in, I think you need to wait for either price to come back to 118, where you can take a long on a hold, or a breakout above 120, where you can take a long as well. PPO is trying to reset right here. RSI is trying to break back above 50, but this has been real choppy action. I mean, you can tell nothing, we've been chopping at a very narrow range for the last several days with no real clear short-term direction being carved out. Tesla had the big impulsive move. Here was the first day since it was announced that the S&P inclusion had a move up, came back here towards 430, and then yesterday moved higher to flirt with the all-time high at 502.50. Now, what I did was put on the fibs in brown, and you can see that if price were to come back and back test this 466, it aligns perfectly with a 38% fib retracement. If you were looking for a nice objective low risk long on Tesla, and for whatever reason price came back to 466, right in that area, I think you can take your long there with a stop just below, maybe at 460. So you got $6 of risk for $35 of upside, because really on this type of a move, I would think if you got a pullback, you would get a next leg that took out this high, come down here and then go higher. So that to me would be a really nice entry if you got a back test. Here, you can stay long against 502. If price stays above it, there's nothing wrong with that. I mean, if you cleared the all-time high and you hold it, maybe it just builds a flag here instead of having this corrective move. So watch for either scenario. And if you are, if you're a nimble two-way trader and you see this starting to break down here, you can get short against 502 if you see a pullback starting to get underway. But I would be covering into 470 and then flipping long. So you could be short for this leg if you get it, but then cover and reverse and go higher. I think Tesla's going to be going higher, and that would be the way I would play it. Of course, always have your stops in place in case the grand theory is wrong. Microsoft didn't do anything. Came down here, made a reach towards 210 and reversed. There wasn't any particular structure there for that to reverse like that, but I mean, it is what it is. I would have thought that it would have reached down, to these prior lows in the gap before doing that, but that didn't happen. So now, again, to my eye, 212.50 is your pivot. You can see that line here where we've had, reactions here, bunch of reactions here, and reactions all through here where, prices reacted to 212.50. I think if price is above, you can be long against it with a stop just below. But if price loses that level, then my favorite scenario would be coming down here to test that 209 level again. Momentum in RSI continue to be real weak. Tough trading in Amazon, nothing going on. Here, 3100 remains the pivot. As long as it holds above, you can look for 3150, but on a break below, I'd favor 3050. So remember, today is Friday, so that makes it, lottery day for those of you that like to do that sort of thing. If there's some type of unidirectional move or some big market moving event that breaks and you see things really light up, you can get some out of the money calls or puts depending on which way it's going and do really well. We had a couple of these events lately where we've gotten, I think one day we had a $200 move on a Friday that was quite dramatic that I think some people did really well on. Doesn't feel like a day like that today, but you never know. You just got to be Johnny on the spot, watching, every candle, and take a shot if that's your thing, and if you feel like you're going to get some kind of big move. Otherwise, it looks like it's kind of range bound here for the time being. Google, I dropped in a midpoint line of this trading range at 1760. You can see here lower half, upper half, lower half. If it breaks above 1760, I think you can get long and look for 1790. Below 1760, I think the door is still open to 1740, or excuse me, 1720. And, we'll take it from there. But you can see this big consolidation that's been going on for really a couple of weeks now, between 1795 and 1720. Netflix, same thing. I mean, I know I sound like a broken record, it just is what it is. Not a lot happening in FANG right now. And, it goes through periods like this before it breaks free. So right here, you're basically toggling between this 487.50 and 477.50 while it's deciding what it wants to do. Now, not saying you can't make money, in a $10 range. It's just obviously more difficult. So you'll have to decide if that's kind of the thing that you want to do, or wait for a more definitive break either above the trading range or below the trading range. A couple of charts for you. CVS rocketed off of this low here, went from 55 to 75 in just a few days. And then right here was the Amazon pharmacy news that pulled the rug out. So it pulled back from 74 back to 65. Notice that 65 is a key support level, and it's also coincides with a 50% fib pullback. So, and also you can see the tag of the 20 EMA coming right up into that area. So for CVS, you've got 65 key support, you've got the 20 EMA support, and you've got the 50% fib pullback. Seems like that would be a nice objective long if you're interested in it, with a stop just below 65, and then look for a move back up. I think, at least as long as I can remember, the initial sell-offs to when Amazon does something always seems to be overdone, and then things tend to normalize in the weeks that follow. So this knee-jerk move may be overdone, and remember, I don't have it marked in here, there's a huge gap. So even just getting a simple gap fill move back to 74 would be a great trade. So consider that if you're looking for a long. Defensive sector, healthcare, drug retailing, not that linked to the real economy. Also because, as these COVID vaccine things come online, CVS and Walgreens are going to be places where you can get that vaccine shot. So they stand to add a lot of traffic and business on, all the COVID vaccines across the country being implemented at some point. I wanted to bring your attention to this new stock called EAR. It's a new issue, just IPO'd a month ago, toggling here between 33 and 40. There are no options on it at this point, but put it on your radar. It promises to be a disruptive force in the hearing aid market. And I'm no expert, but I know hearing aids are a freaking ripoff, compared to other technologies where, a pair of hearing aids, can be like $6,500, $7,500, which is insane. And this company promises to turn that gravy train into a much more competitive market. So this may get traction over time. I'm not going to do anything with it unless an option chain pops up, but you may want to with the common, depending on how you're set up. But that's pretty wide range. A breakout above 40 would target 47, 48 on a move. So anyhow, just one for your watch list. And then Big C. This one we had been trading in here on this bounce up into the low 100s. Now that has rolled over all the way back to key support at 65. Support is support until broken. So, I mean, this is where you're supposed to buy. I mean, key support with your stop just below. And then, if you're wrong, you go the other way because there's nothing. Could turn out to be a broken IPO after all the hoopla. At the end of the day, if it loses its IPO low, there's going to be a lot of people, everybody that bought, everybody will be losing money. And that's that may be a, get out of Dodge moment if it loses this 65 level. But until then, it's a long, it's above key support. So if you want to play that, there's no more an objective spot than right here. So I will leave that up to you. I may take a position. It's on the radar, let's put it that way. Okay. Let's recap real quick. Bulls and bears still wrestling as our growth versus cyclicals and value. Don't know which way it's going to break yet. COVID cases continue to get worse, not better. We are facing, tough times on the ground in the near term economically, but with a brighter future ahead, and the market's trying to figure out which is more important at the moment. We also got that news where Treasury is asking for all their money back from the Fed programs that have not been used. That may be market moving today with a couple of Fed speakers. Maybe they'll mention it. Please mark your overnight low on the futures. That may be a target today. And also, today is November option expiration, so please check your positions and deal with anything that's expiring today that you need to take care of before OPEX hits. And also be ready. It hasn't really panned out lately. Option expiration has not been as volatile as it has been in the past, but you can't count on that. So never underestimate shenanigans and weird things that can happen on an OPEX Friday. So let's leave it there, and I hope you guys have a good morning of trading, and I'll touch base later in today if anything is moving, happening, things to take note of into the close. If you're new here, thank you for the time. I hope you benefited from the content. If so, please hit the subscribe button and the alarm bell. That way you'll get all my content when I send it out. Also, over in the show notes are places to links to the blog site where you'll find a lot of interesting articles, helpful tips on trading, and a place to register for all my content where you'll get a convenient email each and every time I publish new information. And you'll also get a link to our trading room where we'd love for you to join us. A lot of good traders in there, a lot of good camaraderie, idea generation, and that's always a good thing. We'd love to have you. Anyhow, this has been Chris Buss with Traders Profit Compass. Have a good trading day and talk to you next time.